Welcome to the Morningstar Market Minute, a new video series that we're releasing each Friday looking at market news, market outlook, and our portfolio positioning and what we've been doing in our portfolios. Tariffs have been dominating the headlines since Liberation Day and caused some pretty large falls across markets. Now, a large part of that, what caused those falls, is the posturing between China and the US around some of the tariffs that have been introduced and some of the extreme levels of tariffs. But the big news this week has been a de-escalation in some of this tariff posturing with an interim agreement made between China and the US around some of these tariff levels and brought down from the extreme levels of over 100% to more sort of manageable levels. These are temporary agreements, but the market's really seen that positively and moved substantially higher. So what to take from all this? So firstly, it's a pretty good reminder that you can't time markets in the short term. So anyone who's sold out at the bottom has missed the rebound. Frankly, no one with any certainty can time these market moves. To be a good investor, you have to be pretty comfortable living in the grey. And the way to do that is to have a strong process, and such that you take out the short-term noise and have a process that focuses on the long term, and any short-term decisions you make are for the long-term good. So through the volatility, our valuation-driven asset allocation process has pushed us towards buying equity assets. Not that we're trying to trade markets, it's because those falls have improved valuations and the forward-looking expectations from here. So we've been rebalancing equity exposures up across our multi-asset portfolios. Beyond the broad market opportunities, the noise around tariffs has created some opportunities in those directly impacted by those tariffs. Chiefly among those is consumer discretionary. Some of the names within that sector have been really hit hard by these potential tariffs. And no one likes uncertainty, and that uncertainty has marked down stock prices across the board, and to us has created opportunities within particular industries. Apparel and luxury being one, and global autos being another. The latter of those industries highlights an important part of investing, that good businesses don't necessarily make good investments. Global autos is a pretty terrible industry, but everything has its price. And all that bad news is baked into those prices, but with prices so low, they make for a potential great investment. When we talk about outlook, we're not talking about next year, but we're talking much more longer term than that. In our view, we're still pretty cautious on the elevated valuations that we see in the US. That said, there are select opportunities out there for those willing to be a bit different. Emerging markets is one of those. And within those, the countries we like, China, Korea, and Brazil. Our outlook for government bonds is worth calling out. With yields in Australia and the US at 4.5% or thereabouts, at yields of those levels, they have a nice cushion where there's room to fall should things go wrong across the board. With the market volatility, it's a great time for our annual Morningstar Investment Conference, which is on next week. A packed agenda full of great speakers, great topics, tackling tariffs, tackling many things across many asset classes. Look forward to seeing you all there.
Any advice in this video is general advice prepared by Morningstar without reference to your objectives, financial situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.